Oh man, a disaster. CPI reading sends Bitcoin tumbling down. Bitcoin red candlesticking was up initially today, 2.2%, falling dramatically, now down 1.2% here, trying to consolidate shortly. But what are the price targets? How low could this go? The American markets are set to open up shortly. What impact could this have on Bitcoin, and what were the CPI readings? Well, this is what we got, guys. Smash the like button, don't forget to subscribe, check out BYBIT, BITGET, links in the description. Inflation expected to come in at 8.8 versus an 8.6 the previous month. It came in high, 9.1%. Remember, anything with a 9 handle was always going to shock markets. We thought 8.8% was bad enough, an uptick from the 8.6, but 9.1 is a big surprise to the upside. We then thought, hang on a second, as long as core inflation comes down, we're going to be good, right? And core inflation was expected to come down from 6% all the way down to 6.2 down to 5.7, but it didn't. It came in at 6%, okay? So, it came in at 5.9%. So definitely seeing core inflation higher than expected of the 5.7 as well. Then moving on, we have to look at the month on month. And what happened with the month on month? Let's take a look. As you can see with the month on month, that came in at 1.3 versus the expected 1.1. Now, what does this mean? Well, if you're running at a 1.3% month-on-month inflation figure, that is 15.6% annualized. In other words, we're running at the fastest rate of inflation that we have seen. Now, it's important to understand this is indeed a lag measure. CPI is a lag measure because it's looking at the June data, and since then in July, we have seen some factors which should bring it down. Okay, we have seen energy prices come down, we've seen some commodity prices come down, but still worrying that core inflation was not coming down as expected. Again, it was supposed to come in at 5.7, it came in at 5.9. Now let's take a look at how Bitcoin is responding. You can see we're kind of holding up here on the 5-minute chart. It's holding at the support. If I zoom out, you guys will see what it was doing. We kind of fell in lead up to the meeting, we broke down from the channel we're in, and then it just bounced. It bounced back up and it was just holding at this 20,000 level, waiting for the CPI data to come. And as soon as that data came out, it tanked to the downside. Now, if we had 8.8, the market could have shaken it off, right? Because the market was pricing in a 75 basis point rate hike already. But as you can see, the market has had to move now. Literally, as we speak, this was 7% yesterday. Then it was 12% whilst I was live streaming the CPI data. And now, when I refresh, it's at 31%. In fact, let's refresh again just to see if it's moving again. There you go. 47% has now priced in a full interest rate hike. 1%, 100 basis points. Remember, Jerome Powell ruled that out. Jerome Powell in the last FOMC meeting came out and gave a 75 basis point rate hike. And he said, this is high, don't expect this too often. Then in the FOMC minutes, we saw that it's likely we're going to get 75 basis point again next meeting, but he ruled out 100 basis points. Now the market is doing it for him. Half the market has now priced in, I'm expecting that to go up as well, has priced in a full percentage point increase in the interest rate at the next FOMC meeting, which is on the 27th of this month. So we've got now about 2 weeks, quite a long time, quite unusually a long period of time between the CPI data and the FOMC meeting, where the market needs to wait to see how Jerome Powell responds. But remember, guys, inflation is not the only focus on the markets right now. The other focus are earnings. I mentioned this in yesterday's video. It's really important that we look to earnings. We had Pepsi beat yesterday on earnings. We've had Delta give a mixed set of earnings today. They beat on revenue, but they missed on adjusted earnings per share. You can see there, they were still profitable, $1.44, but the expected was $1.73, so they missed, okay? We've got a whole bunch of major banks reporting later this week, from Morgan Stanley to JP Morgan. This is going to be important. It's not just what earnings do they provide for Q2, but it's what are the projections they are giving for the next quarter. And you can see here for Delta, which the markets didn't like, the share price has plummeted. They said third quarter capacity would be 83 to 85% of 2019 levels, which is saying, again, we're about 20% off from being back to our pre-COVID levels, which is not great for Delta Airlines. And it won't be great if other companies are feeling these same pressures. If they're feeling demand slowing down, that could signal a recession, right? But this 9.1 reading doesn't help, because the 9.1 reading is going to give more impetus to Jerome Powell to go and do what it takes to squish inflation. He needs to bring it down. He's going to have a lot of political pressure from people who are feeling it at the gas pumps to say, hang on a second, bring inflation down. We cannot sustain this for much longer, even if it means you have to drive us into a recession. And we know Jerome Powell's already said he's going to do whatever it takes to bring inflation down. So quick bit of technical analysis. What are we expecting here? Let me switch over to the, actually this chart shows it quite nicely. You can see where we're at now. And the first pivot point is going to be at this level at around 18,600. That is what I'm looking out for. I'm then looking out for the next low, which is the lowest point we reached at 17,600. Those are the two key levels. Now, if we zoom out a little bit longer, what you will see if I go to the daily chart is that in this channel, we've been falling. We've been consolidating into FOMC and CPI meetings, which are the dotted lines, and then we crash again. We consolidate, we crash again. I've shared this data with you over the last couple of days to show you the patterns, and now we did the same thing. We consolidated in a channel into the FOMC meeting, and now if we break below this, your price targets can start to come in at the 15,000 level, which gives you some confidence around some support as well. Okay, now again, if you want to look at it like this, you're also breaking back into your symmetrical triangle, which if you now break down to the downside of this pattern, again, gives you confluence at around that 14 to 15,000 level, okay? So those are the levels I'm thinking about right now, but we need to take it step by step. We need to look at 18,500, then you need to look at 17,600, and then you can look at lower price points from there. I will be setting a bunch of limit orders to get my Bitcoin purchases in. The lower we go, the more I'm going to want, because I'm going to build, because I've got good conviction, and the lower it is, the more of a great opportunity it's going to be for me to load up on some Bitcoin. Not loading up any altcoins right now. Focus on some Bitcoin and maybe some Ethereum if we get some prices back under 1,000 on Ethereum. Guys, don't forget to smash the like button and subscribe. If you want a more detailed breakdown, you can do that with the 1 hour live stream when the CPI data came out. Don't forget to smash the like button and subscribe. Check out BYBIT and BitGet, links in the description, and I'll see you in the next one.